Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business and see if these companies are really singing our tune or just blowing smoke. Today we've got Uniti Group Incorporated, and they're dropping some news about refinancing their debt, which sounds a bit like rearranging the deck chairs on the Titanic. But let's see if this is a smart move or just a way to kick the can down the road. So what is the big deal here? Uniti Group Incorporated is basically telling us they're shaking things up with their debt. Imagine you have a lot of different loans and some are coming due soon. This report talks about getting new loans to pay off the old ones, hopefully with better terms. It's like taking out a new mortgage to pay off a high interest credit card. Let's get right into what they're actually doing. Uniti Group Incorporated is a company that provides broadband, cloud, and network services. Think of them as the people who bring you internet and phone services, often through infrastructure they own. Their stock is traded on the Nasdaq Global Select Market under the ticker UNIT. This means a lot of people are watching this company and their financial moves can really impact investors. Now, the main story here is all about money and debt. Uniti Group Incorporated announced they are offering new loans called Senior Secured Notes. These are basically IOs from the company that are backed by their assets, which means if they can T-pay, the lenders can seize those assets. They're looking to raise $900 million. And who are they selling these new loans to? They're aiming for big investors like pension funds or big investment firms who are considered qualified institutional buyers. They're not really selling these to everyday people like you and me. But why are they doing this? The big reason is to pay off older, more expensive debt. This is the key part. They have these older loans, the 2028 secured notes, that cost them a hefty 10.50% interest. That's a pretty high rate of interest by issuing new notes and getting new loans, which they're recalling the 2025 term loan potentially up to $1.5 billion. They plan to pay off those expensive 2028 notes completely. Think about it this way. If you owe money on a credit card with a really high interest rate and you can get a new loan with a lower interest rate, you do it to save money. That's what Uniti is trying to do here. They're also extending the maturity dates on some of their other loans, basically pushing back when they have to pay the full amount back. This is a critical detail. They need to successfully raise $2.4 billion from these new loans to actually pay off the old ones. If they can T-raise that much money, this whole plan to get rid of the expensive debt might not happen. Of course, when companies talk about finances like this, there are always risks involved. This section is what we call forward-looking statements. It is basically a heads up from the company saying, hey, we're hopeful about these plans, but things might not turn out exactly as we expect. They're warning investors not to rely too much on these statements because future results could be very different. They list a bunch of risks, and some of them are pretty standard for a company in this industry. For example, competition is a big one. If other companies offer better services or lower prices, Uniti could lose customers. This is a really important risk for Unit specifically. Having a lot of debt means they have to spend a significant chunk of their money just paying interest. This leaves less money for investing in new technology, upgrading their network, or even just keeping the lights on for their day-to-day operations. It can really limit how the company can grow or respond to challenges. They also mention risks like unexpected difficulties with mergers, technology changes, data security issues, and even government regulations, which can all impact their business. The actual details and confirmation of this whole refinancing plan were announced in a press release. Think of this SEC filing as the official, more formal announcement, and the press release is the public-facing story. And who is signing off on this? Daniel L. Hurd, the Senior Executive Vice President, General Counsel, and Secretary. This tells us it is a high-level decision and review. So what is my take on all this? Uniti Group Incorporated is in a situation where they need to manage their debt. Refinancing debt to get lower interest rates and longer payment terms is generally a smart move. It can free up cash flow and make the company financially healthier. However, the success of this plan hinges on their ability to raise the full $2.4 billion they need. If they fall short, their current high interest debt remains a significant burden. The company operates in a competitive and rapidly changing industry. While they're trying to improve their financial footing, they also need to keep pace with technology and fend off competitors. The risks they mention, especially the ones related to their high indebtedness, are significant. If they can manage their debt effectively, it could hinder their ability to invest and grow, putting them at a disadvantage. In conclusion, this is a crucial step for Uniti Group Incorporated to improve its financial health. It's a strategic move to lower their interest expenses. But investors should watch closely to see if they succeed in raising the necessary funds and how this impacts their ability to invest in the future. It's a classic case of a company trying to get its financial house in order. Alright, that is our breakdown of Uniti. S latest filing, what is your take on these numbers and what they signal for the company? S future, do you think this refinancing is a win or a worry? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps the channel, and subscribe for more deep dives into the world of corporate finance. Don't forget to check out our Discord community in the description for more discussions and insights. Thanks for watching, and I'll see you next time.